It's all green today, and we did get the pump that we were looking for yesterday. So you can see inflation at 7.1% in 2021 versus now. And that is the reason for this massive pump. Everything is green across the board. And I'm sure the next question that you guys may have is there going to be another incoming pump this time? Not the inflation pump, but maybe the FOMC pump. And if so, what are the next price targets? So I'm going to give you those exact levels in just a moment's time. Without further ado, let's get straight into it. First, go through to my Twitter over here. Vote on which box you want open today. Remember, we do the giveaway that is for the festive season, so our Christmas giveaways. Decide which box you want opened. Obviously, the one you want to choose is the one with the most money in. If you do want to participate in this and you have not yet already signed up, all you need to do is open up a BYBIT account. There is a current promotion running whereby you're getting up to $30,030 in sign-up bonuses, depending obviously on how much money you actually deposit into the account. And you just have to fund it with $250. Then you'll be added onto this list over here of all the $250 accounts, which whereby you are available to join in this competition. So let's move on into the more important things, which is the actual price action and analysis for today. So Thursday, big day coming up, of course, and there's gonna be a few major events that take place today on Wednesday. You got CPI year on year. You also have core CPI month on month. That's at 3:30. That's my time, which means that it should be, okay, excuse me, I misspoke. It's at 9 p.m. my time, which means the FOMC meeting and statement is probably going to be a few in the US. That puts it around about, I think it's about maybe 10, 11 a.m. your time. So keep an eye on that. That is going to move the markets. I think that Run will most likely do a live Twitter Spaces for that event. And it is expected that it's going to be 50 basis points, which is down from the previous 75. And therefore, there should be some sort of a reaction from that, most likely to the upside. The only real difference would be if there's a surprise for some weird reason that it's at 75 basis points. That would obviously send the market down. And if there's talks of it coming in at 25 basis points, possibly in the February meeting, then bulls will get really excited, as you can see TED Talk suggests over here. So he says what to expect. 50 basis points hike is a bullish impulse in BTC and risk on assets with a hawkish Powell press conference. Then it might bring Bitcoin and risk assets back into their range. So basically 50 basis points and dovish talk, expect a massive continuation spike to the upside. 50 basis points, which is probably what's going to happen. And then it all just comes down to if he's hawkish or dovish. If he is hawkish, expect a break back into the range. So we'll cover the range levels for you shortly. In other news from Autism Capital over here, Sam Bankman-Fried, in case you guys didn't know, his bail got denied. So he's been taken into prison in the Bahamas until the 8th of February, which is pretty interesting. They say Fox Hill Prison, that's the one that he's in. It's one of the top 5 worst prisons in the world. So for those of you who may have lost money, you might take some joy in hearing that justice is being served. And then I also wanted to cover this. This is actually pretty serious. So Jacob shared over here that CSA believes that stablecoin arrangements may constitute securities and or derivatives. This categorization could lead to major delisting of stable coins on Canadian exchanges who are prohibited from allowing clients exposure to any crypto assets that is a security or derivative. So that is pretty scary. That's not really something that you want to hear. We know that Canada is quite draconian in their ways. They've shown that over the last couple of years. But the question is, does this spread into other big nations or does the business just move into the kind of the free states? And hopefully it's going to be the latter rather than the former. So Merch shows here, just to recap what's gone on in Canada over the last while. It's illegal to trade over $30,000 in crypto unless it's BTC, ETH, Bitcoin Cash. Honestly, why? Well, how did they pass this law? Bitcoin Cash or Litecoin? 50% capital gains tax on your crypto, 53% income tax. Ontario is the highest bracket. And then it's illegal for retail to trade leverage, since they somehow think this caused the FTX blow up. and he says, "Get me out." So he's from Canada. Like, absolutely crazy. Just something interesting that I thought I would share with you guys, but really, really crazy. Let's move on from that one. I want to go on to the actual price action charts over here. Bitcoin on the weekly. Here is the volatility indicator on the bottom. You can see it's kind of still trending down ever so slightly, but if it starts to tick back up above this midline over here, which is the orange line, that would suggest that volatility is coming back into the market and will hopefully have a direction. Now, some very easy levels stand out on this chart over here. Let's just grab the trend line over here. If you do have a look, first and foremost, you have the middle Bollinger Band, which is coming in at $19,431. That is going to be a resistance level. And then I had always warned of this region over here between 18 and 19K. You can see that this is going to be resistance pretty much anywhere between here and the middle Bollinger Band. This is going to be a strong area of resistance where I expect underside resistance to be tested. And who knows, potentially it could break through. Potentially you could see it go through. But if you're trading it as a technical analyst, this is resistance. And what do you do with resistance? You sell resistance. That means you should be looking for another lower high within that region. Now, where do things begin to change? I'm sure a lot of you also wonder that. Well, if you do see price break through that resistance, more importantly, you want to clear this level over here. So only once price gets above the previous lower high on the weekly scale, which is coming in at 21,000. Let's just round it up to 21,000. You start to clear above 21,000, and now there really is talks that maybe the bottom is in. But unfortunately, you have to be patient and you have to wait. There's no way of knowing that before the actual time happens. You have to wait for confirmation, and this is going to be a strong level to contend with for the bulls. 3-day chart, very, very simple. Inverted chart. I must add, I did show it on yesterday's show. You do have this trend line coming in. Where would price hit if it hit into that trend line? 19,500. And then you would expect to continue to play the trend with higher lows and higher highs. So this would be, again, also where you're looking for the next higher low. But things could change, of course. I showed you on this chart, on the 4-day chart yesterday, if you do hold above these moving averages, your target then becomes 18,900. So you can see all these levels of confluence lining up on the weekly chart, on the 3-day chart, on the 4-day chart. It all comes down to this $19,000, $18,000 to $19,000 region, which is where, if we do have a continued relief rally today and a spike through to the upside, that's kind of where you want to pay serious attention to see, is it going to be left behind as a wick? And what would that wick look like? Well, if you look here on the stock market, here's a prime example. Strong resistance line. It's been holding the entire year since the all-time highs. You do have the 200-day moving average as well, where you deviated above, rejected off the trend line, came back down, came directly into the 200-day moving average as well as the trend line rejected. This time came up, deviated below, and then zooming in, look at that massive rejection. So for anybody who doesn't think that technical analysis works, I mean, this shows that basically people are looking at this trend line, and this is a resistance area that price didn't want to get acceptance above. So bulls did not want to get acceptance above this level. Bears took back control and rejected price all the way back down. And now you have a massive wick. And in actual fact, if price does reject from this level over here, this would be an absolutely enormous bull trap. Now, I don't think that that's what's going to happen. I'll show you what I think is going to happen. First, I do want to also address this one over here. This was the short trade that we gave, which was a swing trade. So if you did take this, it was on 5x leverage using Prime XBT, one of the sponsors, you would have been stopped out. Would I re-enter into this? No, I wouldn't. I'll just delete that. You take the loss on that one, small loss, low leverage trade. And now you look at the next levels. Now, what would the next levels be? What would my expectation be? Let's go into this one. I think it's a cleaner setup over here. Same chart, S&P 500 futures. I told you guys I would then view this as a range. So I'd be looking at this as a range. This is pretty much your main range over here, your range low coming in on this area. So you're looking at that. and then potentially all the way up to there. There is a possibility that things spike even higher. So all you want to do is look for where price begins to reject. It could spike through this level if today's good, obviously, which is expected. 50 basis points is less than the previous 75. Naturally, you would expect that bulls are going to obviously start calling for macro bottom. They're going to start to say that obviously things have changed and the Fed is slowing down, and they're going to continue to ease and slow down into the new year, into 2023, and therefore bull run is back. Price-wise, what do you see? Well, what you would see over here is obviously there is going to be a lot of stops that have been placed here. There's also going to be a lot of stops that have been placed within this area. That means free liquidity. So what you could see is price come through here. You don't need to front run any sort of a short. All you need to do is observe price action to see when it deviates back into the range. So that could be one option. That's option one. That could happen. Option two is it could also go up a little bit higher. So you might see that. And you might take out these stops over here, liquidity grab. And then once you have deviation coming back towards the range over here, then you look to short it back into the range. That's kind of the way that I'm viewing it. And then we'll see. Maybe things start to change after that. If it does start to change, what would that look like? Let's just clean this up a bit. Okay, if it does change and an uptrend does start to get established, the Fed start to pivot entirely. They're very, very dovish. They say next year on the cards is almost inevitable. It's going to be 25 basis points. I'm just talking from a hypothetical standpoint. What would that look like? Well, push up into this area and then a retest of the top of the range. And that area would be tested as support. And then you'd be looking for your next higher low, and then obviously continuation onto the upside. So that's kind of the way that I'm viewing it. Definitely need more information and more price action to unfold before we can make any majorly bold calls. But that's the S&P 500 for you. Addressing things that are going on with CZ and BNB and the Binance coin. I'll touch on the chart shortly. But I think he has done a pretty good job of keeping everybody up to date, tweeting regularly. And he says over here, whether it's true or not, I can't say. I can't vouch for that. I'm just sharing the information. He says things seem to have stabilized. Yesterday was not the highest withdrawals with that we processed, not even in the top 5. We processed more during Lunar and FTX crashes. Now deposits are coming back in. So pretty interesting over there. That means they're being battle tested, and it could be a net positive at the end of this. If they do withstand this, they'll probably be looked at as one of the most tried and trusted exchanges out there. And he shows you as well. On USDC, we have seen an increase in withdrawals. However, the channel to swap from PAX to BUSD to the USDC requires going through a bank in New York in US dollars. The banks are not going to be open for another few hours. We expect the situation to be restored when the banks open. These are one-to-one conversions, no margin or leverage involved. We will also try to establish more fluid swap channels in the future. In the meantime, feel free to withdraw any other stable coins, BUSD, USDT, etc. So he's definitely putting his money where his mouth is. He's encouraging people, keep withdrawing, go for it. So pretty bold of him. Interesting. Yes, someone said that it's a soap opera. It definitely is a soap opera over here within crypto. I guess this is what we do in a bear market. We have nothing else exciting going on, so people want to battle test exchanges and follow the SBF case. So that's kind of where we are in the market cycle. But now we need actual data to verify, right? CZ's tweets are not enough. Nansen over here shows the Binance net flows, and it's the lowest hourly withdrawals in the last 24 hours. So they say that it does appear that the FUD storm has passed, at least for now. You know, what I have to say about this is, look, if you're an investor and you're holding positions for years, even if you're holding positions for months, why keep it on an exchange? You don't need to do that to yourself. Just be safe, remove all the counterparty risk, and move it onto a cold storage wallet. That's it. It's as simple as that. If you don't have the capital to buy a $150 cold storage wallet for whatever reason, then at least use a MetaMask to hold your ERC or Binance Smart Chain tokens. Okay, price-wise, here's what we have. I know a whole lot of lines over here, but kind of the main range is this. You can see BNB has been in this massive range. So top and bottom of the range over here. This is your mid-range. pretty much still bearish. You have lower highs and lower lows, so continuing to the downside. And I did say yesterday, look, where you start to panic is if you lose this mark over here, 220, anywhere between $220 and $225. Once that level starts to get lost on the BNB token, then it's pretty much just thin air between. There's no support here. Let me just grab that. There is no support here. You might have a small bounce then at $126, and then after that, once you lose that, you're going all the way down to 40. So just know what you're dealing with. Know where your level of risk is. I know that a lot of people see BNB as like the next ETH kind of thing, so they have quite large positions. Rand himself has an enormous position of BNB. I don't think that I'd want to torture myself with holding too much of this, because if that level does get lost, then it could be tickets. But with that being said, you could have a very good risk to reward ratio on a long if you're using this as your invalidation level, which is the area that we met in June the 18th, the low from June the 18th. All you need to do is, if you do build a long position, you just want to see that level hold and your stops are directly underneath that. And then if that gets lost, you can pretty much pick it up at 125. So that's BNB. Now onto Bitcoin price action over here. Let's just clean this up to show you. There we go. Okay, so that's kind of what we're looking at over here. We have had a series of not higher highs, but higher lows ever since the 21st of November. We had another one on the 28th of November, another one on the 7th of December, and then the last one now, most recent one on the 12th of December. This is all going to be an area where a lot of stops have been placed. And this is pretty much played out, I mean, if I may say so myself, exactly as I had expected, which was I was looking for, that's why I'd marked out these vertical lines, CPI data, Fed decision. I was looking for a pump into those days and then most likely gets faded after that. First target has been met, which was the June low. Next target is all of this underside resistance, and then I'll take it from there. I wanted to de-risk my positions into these days, which I've done by now. If you follow me on Twitter or you're on the Discord group, I have been keeping everybody up to date over there. Personally, I feel comfortable being de-risked because I'm not an investor in this market at the moment. I'm just simply a trader. I become an investor once we start to clear above these levels over here, which is that 21,000, 21,500 level. Once we start to clear above those levels, I start to buy major pullbacks using my basically my investment portfolio with spot positions. Otherwise, I would still be treating this in the same way that I have throughout, which is all bear flags, pretty much. These are all bear flags. Price grinds up, breaks down the bear flag, comes back down, breaks down the bear flag, and then you slowly grind up, break it down, slowly grind up, break it down. Now we're on the orange one over here, and I'm pretty much treating it exactly like these ones until such time as we get above that zone over here on the left-hand side. So I hope that helps. That's the way that I'm viewing the market. I have no FOMO, no panic, nothing. I've made some good money participating in this. This was the trade. I'm out of the trade. Full disclosure, I'm out of the trade. I may have gone out prematurely, but I'm just managing my risk. I'm not saying that the pump's over. I actually do think that we go higher today. I'm managing my risk, and that's all that it is. My leverage trade was a short-term trade opportunity. I capitalized on that. I closed the position just before the 18,150 level. I think I closed at 18,000. Well, we got to 18 on the dot. So I closed just below that, about 17.9 within that zone. So that trade is over for me. I will be looking for the next setup. Now, when you look at the 4-hour chart over here, if things are going to change, higher time frame, and we start to clear above 21,500, and the high time frame picture starts to change, and we start to establish, a bullish market environment for much more major upside moves. What it would look like from my trading perspective is this. This is the way that I usually would work, right? Let's just make this bigger, and I want to kind of paint you a picture over here. So I kind of make my investment decisions using the 4-hour chart. I use other high time frames as well, like I said, the weekly and the daily. Once those clear 21.5, then you've now made a high on the weekly and on the daily. That means it's all system go. Once then I'd be looking to buy the next higher low on those time frames. And now I want to show you on the 4-hour chart what that may look like, just so that you don't panic. Okay. Look at the pink moving average and the blue moving average, or exponential moving average. The pink is the 50, the blue is the 200. What I like to see is I'd want to see these posture upwards like this. Okay, I want to see a cross, golden cross over there. It would happen something like that. Price at this point, let's say things go really well now with the FOMC meeting, and price does this. Okay, so price is currently at 17,000. Let's just say it gets above here, goes up. I'm still not FOMOing in, Now we break 21,500-ish. We come back down. Usually there will be a retest back into these moving averages. And this is where I would start to build my position between the 50 and the 200 moving average. That's kind of the way that I make my decisions once we go back into a new bull run. So when you look at this, what would I be losing out on? Well, versus aping in now with no confirmation at 17,795, I would then be entering, just give or take, somewhere around this mark over here, which is between 18,500 and 19,000. What is the price difference on that? So I'm entering with a difference of 6%. So I'm just putting this in perspective for you guys, because I know a lot of people experience extreme FOMO once you get into these pivotal levels within the market where the psychology is really the strongest. The battle between the bulls and the bears is very, very intense. And you have this area where if you just clear just above that, bulls take control. If it rejects on that zone, bears are in control. That's where people start to FOMO in. I don't. You're losing out on hardly anything. 6%. Guys, when I sold pretty much around $50,000, what is 6% loss to the upside for a safe entry? It's nothing. So I encourage you to stay safe out there. Do not FOMO into positions. Now, looking at the different cumulative volume delta, what spot price action is doing, let's take a look at this chart. Essentially, open interest, I showed you. I know it's very, very small. Let me see if I can zoom in. Okay, there we go. That works. Okay, if you look over here, this is the open interest. Open interest, every time it resets, I told you that you can expect that price action will rally off of that. We did reset. We are coming down once again. So if we come into this zone over here, which is between 227 to 235,000, using this indicator, this is on Coinalyze, then I do expect that spot will probably reload. From a price action standpoint, I know it's very, very small. Let me see if I can zoom in a little bit. I would expect that to look like this. So if you do see any pullback into this trend line, where do they keep the... I'm just looking for the pen. Here we go, the brush on this one. So if you do see a pullback into this trend line coming back towards 17,000, I would definitely load up on that and buy that again, because that is just going to be another higher low. You do have this region over here, which is the open interest, which is reset. When you look at what's happening over here with the futures, the margin contracts over here, which is people that are on leverage, that is continuing to push up. But now, for the first time in a while, we do have spot that is attempting to chase that price action. The spot throughout for this entire consolidative period that we've had for months now has been selling off, and for the first time it is starting to tick back up. So the question is, will that continue? Well, I thought let's go on to Skew's thread, because he does a really good job at this, and he says that BTC December so far and CPI market reaction. Here we can see major short hedges unwinding from coin margin perps, which is the CVD, cumulative volume delta, and he says that the spot CVD is showing some muscle as well from buyers. So what do you have? You have shorts that are covering their positions, guys that have held their short positions for a long time. That creates a spike up in price. Bulls get very, very excited. It's obviously an intense moment. Powell's probably going to give 50 basis points. We haven't seen that in a while. Spot buyers also start to jump in, might be retail. And then he says perps have been buying into the CPI release with systematic triggers lows, which we saw on yesterday's close. And then he shows here all the different spot delta versus CVDs. So you can see that spot is coming back to the party, and BTC perps delta and CVDs. Also, you can see the big spikes over there on the left hand side, and this is what he's looking at, very similar to me, a liquidity grab. So the BTC 4-hour first strong break above the 200 simple moving average since the 25th of October, which is a systematic trigger. That is key, by the way. You start to clear above those 200 moving averages, simple moving average, exponential, it doesn't really matter which one you're using, but on the 4-hour chart, those are quite key levels for the potential to shift the market direction. Then he says we broke out of the daily trend to the upside as well. Would like to see 17,500 as a retest, which is what I just showed you on the previous chart, before then trending back up towards 18.4. And 18.4 he has over here. Let's just zoom out a bit for you. There you go, which is a previous daily support level. This is where liquidity will be found, and you can expect a major pullback or reaction. I closed my positions a bit prematurely because I don't need the risk. I don't need to wait to be sure that we're going into that zone. I bid from much lower. I think it was around 16,600 or so. So I'm happy with my trade. And there you have it. This was the range that I was working on. We tagged directly into the range high. And what would this look like now if bulls take back control? This is still the smaller range that I'm dealing with on the 2-hour time frame, or you can put on an hourly. If you do see a spike out through that level and then a retest back into the top of that range, which is 18,150, that could be an opportunity to go long a little bit higher, possibly targeting towards that $20,000 region. So guys, that's what I'm seeing. That brings us to the end of today's stream. Today will be interesting. This show is going to obviously have happened many hours before, but even if you're watching this late, it should still be relevant for you going into that CPI event. Expect wild swings, expect volatility. As a short-term trader, the best thing to do is probably not participate in the wild flows and swings within the market. Rather just wait for the dust to settle, and then you get better direction and a high probability trade setup where you can obviously make some serious money. So let's go straight into the competition part now. Let's grab the tweet. Where is it? Okay, we've got the tweet over here. Let's just reset that, go back onto my profile. All right, which box one? Is this loading? Okay, there we go. It's loading. Okay, we have 30. Wow, it's a tie. It's a tie between box 1 and 2 with exactly 34.7% between the two. Let me know in the comments which one you want. Or should we, let me actually be kind. I guess I make the rules here. I'm going to give whichever between box 1 and 2 has the most money. You can win the most money between those boxes. There we go. That's win-win for everyone. Okay, I'm going to go on to the autumn random generator here. Let's just click that again. 361 is the winner. 361, account number 361. So we'll go down to that. 361. Here we have it, 361. So if your account number, your user ID number on BYBIT is 2909, let's just read that again. Sorry, 29090779. Then you're the winner. I'll read it again. 29090779. If that is you, then go and have a look over here. What you'll need to do is reach out to where's the email address? giveaways@cryptobanter.com. It's in the description below, and then you can claim your winnings. Let's go on to the boxes over here. So let's see, who was the winning box again? It's between box 1 and 2. So we'll open box 3 first. Box 3. If you chose box 3, okay, $50. $50. You won $50. Oh my word, I didn't put the hat on. Okay, $50. Let's see, box 1. $250. That's $250. I'm assuming box 2 has the most money in. And you will get between these two, yes, the one with the most money. Congratulations, you won $750. Just reach out to them on the page below over there. Yeah, Rand's gonna snap. Shame. Well, That's his problem. Okay. Here you go. Giveaways at cryptobanter.com. Then they'll fund your account. If you do want to participate in this, sign up to this link over here to BYBIT. If you don't already have a BYBIT link, then please do use my link below. It helps me tremendously. You don't have to if you don't want to, but it does help me, and you get the highest sign-up bonuses by using that link. You have nothing to lose over there. And that's it from me, guys. I will see you all. Oh, I wasn't sharing the screen. Excuse me. There it is below. There is all the links. There's all the information below. I will see you guys all on tomorrow's video. Have an absolutely stellar day, and cheers for now.